Here's Dan Shapiro to help you find your edge, master your process, and own your future.
Hey guys, good morning everybody. Welcome to another edition of the AccessTraded.com weekend update show. Hope everybody is doing well. Happy Saturday. I don't know when you guys are going to be watching this broadcast, around 11 o'clock Saturday morning. It's a wonderful day to have a wonderful day. So hopefully everybody enjoys their weekend. Guys, take a moment out, kindly support the channel. It literally takes a tenth of a second. Click the like button if you haven't done so already. Come aboard, subscribe to the channel. Again, I will do my best to help you out. So a lot of things to unravel or unraveled this week. Number one, it started out last week. If you guys remember, and this is where we talk about, you don't try to outsmart the market. You don't try to guess. You listen to what the market's saying. You're watching for data. Price action matters. Opinions don't. Okay. Levels matter. Opinions don't. So last week, the previous week, we started seeing, despite the NASDAQ continuously kind of grinded near all-time highs, we started seeing data points that we should have really paid attention to, and it ultimately played out that way. Even kind of watching the broadcast just the last 2 weeks, I go over it every single day. What I think is about to happen. So you had 2 weeks ago, you had Meta, Microsoft, Roblox, all coming out with, decent numbers, not great numbers, but decent numbers. The stocks got sold off. You saw rare earths, uranium names, everything, quantum names, everything that was rally, they're getting sold off. And you turn around and say, well, how can the NASDAQ be up near all-time highs? Because every single day, if you guys remember, there was some sort of open AI PR with either NVIDIA or Google or Apple or Oracle, right? Something like that, and just kind of carried the whole market. Also, you had the potential of the Elon Musk, what's the word I'm looking for? Compensate package, right? His compensate package. Can't even delete that. Anyway, compensatory, whatever the hell the word is, package. They were running up Teslas. There was a lot of strength within a sea full of weakness. And if you've been watching the broadcast, I said everything is fine and dandy unless the Qs start losing the 5-day. And I gave the price. I gave the price that was that 626 level. Guys, watch 626. Watch 626. Do not get caught with your pants below your ankles. And that 626 got hit, and the stock market went down like very, very aggressively. And then we talked about 617, right? We said upside to 626, 627, downside, which was the 20-day moving average, 617. Watch the 617, watch the 617. Well, all that happened, and 617 got flushed. We went down to 610, we lost 610, and we went down to the 50-day moving average of roughly that 600 level. I know it went a little lower, a little bit below 599, but got down to the 50-day moving average. And on the surface, the bulls held the 50-day moving average, and we saw a pretty good bounce, right? Really good bounce towards the end of the day. Qs finished basically $10 off their lows, which is, again, good, right? So as of right now, on the surface, as long as we don't close below the 50-day moving average, you can take a deep breath, right? You can take a deep breath. I think you'll be okay. Again, if you are, and again, I'm speaking specifically to the perma bulls, right? You could take a deep breath. However, there's a flip side to that, right? As much as the Qs rallied $10, and there's a lot of names that rallied off the lows, a lot of names did not participate on the bounce. And that's very, very concerning. Again, we want to believe what we want to believe on the surface. But again, you have to play devil's advocate. The same way I played devil's advocate. Hey, we're all-time highs. But again, we're closing every single day lower than we opened. Again, hence these red candles. Watch the 5-day, watch the 10-day, watch the 20-day. Now watch the 50-day. And exactly that's how exactly played out. So as long as we stay above 601 on a closing basis, I think you're fine. Is it going to take a little bit of time for these stocks to kind of rebalance themselves, kind of get their foot underneath themselves? Absolutely. So, for example, if, again, on the surface, we should have a dead cat bounce day tomorrow. Just a continuation of the bounce off the 50-day moving average, putting in this pretty bullish hammer. So ideally, we should have a green day in the indexes. The last thing you want to do the last thing you want to see if you are a perma bull is the Qs gap up and start losing, and start going red on the day. Because if it does go red on the day, then you're going to have a very, very serious conversation in your future. And guys, just write down this level, okay? Just write this down. 598.67. Again, we're 10 points above that. You're fine from now. We're probably going to bounce Monday, Tuesday of the week. But folks, watch this level. Any close below the 50-day moving average of 601, especially confirming last Friday's low of 598.67, you're going to want to rip out your buy button, okay? I've been pretty much sell buys, for the exception of like bounces on Tesla leading up to the vote. I was pretty much sell bias all of last week. I mean, it was a really, really solid trading week. Stocks got absolutely murdered. Tesla, if you guys remember from Wednesday's video, I said I'm not long the stock. Everybody's long the stock. Everybody's betting the same direction. Again, all you need to do is go back to Wednesday's video. All I kept on saying is, I don't want to be in the same trade. I'm not saying they're wrong, but I don't want to be in the same trade that everybody's in. Reddit traders, Robinhood traders, Webull traders, social media, everybody's long Tesla. And I go, I cannot see a world that everybody's betting on the same side that you're going to probably get the same results. And, you had your investors meeting, 75% of the vote approved Elon's $1 trillion package. Of course he was dancing. Would you not be dancing if you got $1 trillion, right? On performance, future metrics of Tesla. And guess what? They sold the stock. We talked about that. And boy, oh boy, did we take advantage of that sell. Here are the pivots from Friday. Again, I said after, there's only two ways a stock can take out. It could take out the previous upper channel, which was 467.45, or it could get below 435. I took the short and the stock got absolutely murdered. We were pretty much done. We got down to runners within the first 15 minutes a day. The first move was down like $7. Ultimately, Tesla got down to 421, 422. Now, why was 421, 422 important for Tesla to hold? It was the same thing as the overall indexes, the Qs, which were down 3% for the week. Tesla held the 50-day moving average and bounced. Same thing goes from the Qs. Same thing goes for Tesla. You know what is going to happen if Tesla loses the 50-day moving average? Take a wild guess, right? So it's very, very important that the bulls held serve yesterday and we bounced. Is it going to have a little bit of hard time getting back into this whole supply, reclaiming back this whole supply area? Yeah, but then I think everything else will as well. So, phenomenal move on Tesla. Went from 435 all the way down to under 422. CELH, again, guys, these second day plays of earnings are the lowest of the low-hanging fruit. What I mean by that is any stock that blows up on earnings, okay, and the next day, I'm giving you literally like the most basic high probability setup there's on the planet. If there's a stock that blows up on earnings and the next day, right, and the next day it loses earnings lows, there's a good chance it's going to follow through. If you guys remember, I caught a pretty good PLTR trade, did exactly the same thing after blowing up. Next day, it gapped up, went below the earnings low. Same thing, look at CELH, 42.88. Basically was a short. There's no more comments. So it lost 42.88, right? Lost 42.88 and went all the way down to 40. And you get nearly a $3 move on a $40 stock. It's a really, really strong move. Where am I? CELH, Amazon, not a big move on Amazon, nice reversal. Stock, went from 42 all the way down to like 39. Let's see here, 42 to like 39, 38.40. So still, almost a $4 move. Remember, the market was getting really, really aggressive. Held the 10-day moving average. I actually like this thing. Again, if we aren't going to bounce, just kind of before we go on, if we are going to bounce, guys, look at the Amazons of the world. Look at the stocks that didn't really go down, right? I'm not going to give you a whole lot of names, but Amazon, at least for the surface, held the 10-day moving average. Obviously, that's the line in the sand, just like the Q's line in the sand, but it put in a hammer. If it reclaims back the 5-day, you can get a nice, fairly good bounce on Amazon. So Amazon, went down about 3-4 points. ARM got smoked. Again, same thing. It's the same thing. Stock blows up on earnings, right? Stock goes up, blows up on earnings. Next day, if it loses earnings low, it should get hit. So ARM, 155, and that was the 50-day moving average. If it loses that, can flush. Here was ARM. It lost the 50-day moving average and went from 155 all the way down to 146. So you can see how powerful the selling was. Google only went down like $1. It only went down like $1. But I just want to give you guys some more examples of stocks losing their earnings lows, right? Like look at SMCI. Remember SMCI came out with crappy earnings on Wednesday, right? Look what happened the next day. Lost its earnings low, got destroyed. PLTR came out with crappy earnings, right? Came out with crappy earnings. The next day, stock got destroyed. So just watch those stocks. You know what? I'm going to give you a couple of names to watch from the same setup. Okay. I want to give you guys a couple of names. Look at Pinterest, right? Look at Pinterest, right? Pinterest blew up on earnings, has not taken out its earnings lows yet. Just put this on your radar this week. Keep an eye on Pinterest. If it loses the earnings lows, it can get hit. Look at, was it Dash? What was the other one? Not Dash. Yeah, look at Dash. Look at Dash for next week as well, right? It blew up on earnings, did not take out its earnings low. If it takes out its earnings lows next week, there should be more downside. So it's kind of like, I want to put you guys on a little game. I've been doing this kind of in the webinar for like the last 16 years. I've been doing this pretty much all my life. It's a really high probability setup. It's like almost the opposite. You know when a stock has really good earnings and the stock is up like 20%, and then the next day opens up lower and it takes out the previous day's high, the earnings high, and it goes higher. Well, this is the opposite. Again, just a really high probability trade. Does it work all the time? No, nothing works all the time, but it's really, really high percentage. If you kind of back test this on stocks that blew up on the earnings, especially to the downside, you will notice that. One stock, it's very interesting. So Apple has been holding up really, really well. You see that, guys? It's been holding up really, really well. But the odd part about it is, okay, on Friday, it did not rally with the rest of the group. And this is now the lowest close. Nothing is technically damaged yet, but this is now the lowest close in the whole formation. Just in case, right? Just in case, I want to watch Apple, because if it could lose the 10-day moving average, especially if the market comes in, this thing could get hit. So I just want to keep an eye on it. Again, there's nothing imminent yet, but I definitely want to keep an eye on it. One thing you definitely want to pay attention to is the IWM. Okay, IWM lost the 50-day moving average, got hit. The longer it stays below the 50-day, I know it's a nice hammer, it should bounce on Monday, but just keep an eye on it. The longer it cannot reclaim back the 50-day moving average, it's going to be a very, very big problem. And look at Wayfair. Nice chart on Wayfair. Wayfair, nice looking chart, came out with earnings, right? Never confirmed. That's kind of my point. If it could confirm its earnings highs, this thing can wake up as well. So that's it. That's it, everybody. Hope everybody's doing well. If you are an active trader, looking to be an active trader, and are interested in pivots, guys, all it takes is 30 days. Come to the webinars, see what it's all about. Kick the tires in the PS60 theory. It's pretty neat, and I think you will like it. Guys, God bless everybody. Have a great weekend, and I will see you on the field on Monday. Take care.